Thank you for attending the earnings briefing for LIFULL for the fiscal year ended September 30th, 2025. Presenting today will be President and CEO of LIFULL, Mr. Ito Yuji, and Managing Officer and CFO, Mr. Fukuzawa Hidekazu. Now, President Ito will begin his presentation. Thank you very much for attending our earnings presentation. I will now proceed with the presentation materials. I will begin with a brief overview of the financial results for the fiscal year ended September 30th, 2025, and continue on with the highlights of our new midterm management plan. First, I would like to summarize the key highlights in three main points. Point number 1. Over the last year, our profit for the period reached a record high level. 2025 also marked the 30th anniversary of our founding, and we are proud to have achieved record high profits during this milestone year. Furthermore, non-consolidated LIFULL also achieved record high operating profit. As previously disclosed, we have completed the strategic transformation of our overseas businesses, enabling us to concentrate our resources on our core domestic businesses in Japan. Point number 2. We saw strong performance in the home services segment, which also reached record high segment profit. Both our client network and average revenue per agent, or ARPA, continue to expand. We plan to dramatically increase productivity by providing innovative AI solutions to our real estate clients, users, and employees. And finally, point number 3. We have also announced record high dividends per share amounting to 10.41 yen. This includes a special dividend of 1 yen to commemorate the 30th anniversary of our founding. We have also raised the dividend payout ratio by 5 percentage points to 30%, effective from the fiscal year ended September 30th, 2025. I will now move on to the earnings digest. First, I would like to look at consolidated revenue. We are continuing to see the results of the developments we have made to LIFULL Homes, as well as the increased sales initiatives of our sales team. These steps have led to an increase in the number of real estate clients, listings, and inquiries on LIFULL Homes. As a result, our revenue has increased by 6.9% YoY, amounting to 28.1 billion yen. Next, I would like to move on to operating profit. Driven by the strong performance of the home services segment, operating profit saw a significant increase, nearly doubling over the previous fiscal year after excluding one-off factors. The actual result for the year was 3.8 billion yen, an increase of 80.3% YoY. Excluding the one-time gain of 910 million yen from the sale of LIFULL Space, we have estimated normalized operating profit at 2.11 billion yen. This marks a 1.8 time increase from 2.11 billion yen to the current period's 3.81 billion yen. On the next slide, we have a waterfall chart showing the items affected in operating profit from 2.1 billion yen in the previous year to 3.8 billion yen at the end of September 2025. The primary factors are the increase in gross profit of 1.7 billion yen from revenue growth in the home services segment and productivity gains of 0.7 billion yen from the optimization of advertising and sales expenses. These contributions resulted in a significant 1.8-fold increase in profit. Over the next section, I would like to move on to our financial statements. First, let's look at the statement of profit or loss. As I have mentioned, the strong performance of the home services segment resulted in a 6.9% increase in revenue and a significant increase in operating profit. Additionally, due to the temporary accounting impact related to the restructuring of the overseas businesses, profit for the period reached a record high of 5.3 billion yen. Next, let's take a look at revenue and profit by segment. The home services segment grew significantly both in terms of revenue and profit thanks to the steps we have been taking over the last year. Other businesses also showed narrowing operating losses, a positive sign. Also, please be aware that the overseas business has been reclassified as discontinued operations from the prior period's results. On the next slide, I will share some details about our balance sheet. As I mentioned before, the application of the accounting treatment for the strategic transformation of our overseas segment in the second quarter has significantly reduced our risk. This includes both lowering the risk of goodwill impairment and future cash outflows from long term financial liabilities. For more details, please refer to the information provided on the right hand side of the slide. On the next slide, I would like to discuss our cash flows. Operating cash flow increased significantly due to a major improvement in the group's profitability, resulting in a positive 4.8 billion yen. Furthermore, the fluctuations in the investing and financing cash flows include factors related to the restructuring of the overseas business. For a breakdown of the main drivers, please refer to the details on the right hand side of the slide. Now I will move on to the overview of our business performance by segment. However, in this section, I will be focusing primarily on the home services segment. Segment profit for home services achieved record highs. Furthermore, revenue has expanded for 8 consecutive quarters, indicating that strong growth has returned. We are also actively promoting the utilization of AI and starting to see the positive effects. Over the next few slides, I would like to share some of the details of our progress. First, regarding the home services segment, the developments to our websites and steps to strengthen our sales initiatives have proven successful, leading to accelerated revenue growth. Segment profit has also reached a record high of 4.3 billion yen. We were able to achieve this due to both the growth in revenue and the successful optimization of advertising expenses, as mentioned earlier. The profit margin for the home services segment also saw major improvements, rising from a profit margin of 11.1% in the fiscal year ended September 2024 to 16.9% in the fiscal year ended September 2025, a significant improvement of 5.8 percentage points year on year. As noted on the right-hand side of the slide, we believe these effects are due to the rapid execution of PDCA cycles and streamlining our business processes. These initiatives include optimizing branding and advertising methods, reviewing business tools, and utilizing AI. As a result, looking at our segment revenue on a quarterly basis, we have continued to see growth over the last 8 consecutive quarters. Although we faced a period of sluggish growth 2 or 3 years ago, the successful restructuring of our overseas businesses has allowed us to invest effectively in our domestic business, and this has enabled our current powerful recovery and strong growth momentum. The next slide shows the trends and key indicators for the home services segment, detailing our total network of real estate clients and ARPA, average revenue per agent. These figures clearly demonstrate our powerful regrowth. The strengthening of our sales activities has increased the growth rate and pace of client acquisition. Furthermore, profitability improvements, particularly in the for-sale real estate markets, have also boosted ARPA. It's like having both wheels of a vehicle turning smoothly. The number of customers is growing, and the unit price is rising. That is directly translating into increased revenue. We believe this is a very positive sign for our businesses. Here we have a simplified depiction of the primary drivers of growth in the home services segment. Starting on the left-hand side of the chart, our focus is first on consistently improving the website and developing services to strengthen the reach of our website. Success here leads to increased traffic. Increased inquiries directly translate into more revenue for us, as we employ an inquiry-based pricing model. By overlaying and strengthening our sales measures, we have been able to further accelerate this cycle over the last several years. As noted at the bottom right, the expansion of various site metrics is ultimately leading to this increase in profitability. Next, I would like to touch upon the investment real estate market, which we frequently receive inquiries about recently. We acquired Kembia 5 years ago in July 2020. Before the integration, Kembia had approximately 40,000 property listings, but this has now more than doubled to over 80,000 listings, showing significant growth. The key factor for this was the database integration carried out 2 years ago in April 2023. Originally, Homes also operated a real estate investment portal, which was similar to Kembia, but by integrating the property databases on LIFULL Homes and Kembia, we have successfully raised our value proposition to new real estate clients. From there, we expanded the number of listings, and by further increasing our sales initiatives, the number of listings on Kembia has grown even more. Consequently, as shown on the right-hand side of the slide, we are also seeing revenue growth. which showed a robust increase of 16.6% YOY. Furthermore, we are strongly promoting the utilization of AI technology. We are providing innovative services and features to help users find the most suitable homes. Our aim is to make the home search process much more efficient for everyone involved. We have released a number of features and products for both end users and real estate professionals. AI Homeschool Beta for Line is a prime example, and we have continued to expand its features. In conventional portal sites, the user experience involves starting a search for rental or sale, condo or house, by train line or geographical area. From there, users gradually narrow down their options themselves until they find potential matches and contact real estate agents. With AI Homeschool, however, users can engage in dialogue with Homeschool, who offers personalized suggestions, creating a new and improved user experience. Please feel free to try it out using the QR code on the page. Apart from this, we have also released new AI powered technologies such as the 3D floor plan technology and image search in custom built housing markets. Next, I would like to show you some of the ways that we promote AI technology to our business partners. We offer a number of different AI driven solutions and features, which significantly contribute to improving the success rate and operational efficiency of our real estate clients. When speaking with real estate professionals, the common problem they raise is a labor shortage in the industry. That is to say, it's very difficult right now to hire and train new personnel. This emphasizes the critical need to continuously increase the operational productivity, making the adoption of AI a high priority matter for them. We are responding to these demands by providing various services as quickly as possible. Recently, inquiries for Raku Raku Deco Room have been increasing significantly. This is an AI powered home staging service. When you look for a new home online, a lot of times you will see photos of bleak and empty rooms. However, Raku Raku Deco Room uses AI to place furniture and decor, making it easier for users to visualize living there. And this service has been very well received by our clients. We provide many other AI powered services and plan to further increase our offerings moving forward. Also, we have a number of group wide initiatives to promote the utilization of AI internally. Over 90% of our employees, with the latest data showing over 95%, are utilizing AI and generative AI tools, which has led to a significant improvement in operational efficiency. In just 6 months, we have created 31,600 hours of operational time, and we are reallocating this time to more productive tasks, such as sales and development activities, and we intend to increase these efforts to further boost productivity. As a result of all of our efforts, we continue to be recognized within the industry and have been named number one in many different areas. A particular focus for us, noted on the left-hand side of the slide, is being ranked number one in property freshness for 2 consecutive years. Beyond the quantity of listings, we emphasize quality, striving for a site with fewer errors and no misleading listings. This refers to the so-called bait properties that are not actually available but can appear on other websites. This idea of maintaining property freshness will remain a high priority project for us. Achieving the number one position in this metric for 2 straight years confirms that our efforts are truly paying off. By appealing to users with these achievements, we aim to differentiate ourselves and become their first choice in real estate portals. Next, I would like to discuss shareholder returns. As touched upon in the main points, we have announced a record high dividend per share of 10.41 yen. This includes a special commemorative dividend of 1 yen, making it the highest payout in our history. Furthermore, effective from the fiscal year ended September 2025, we have raised the payout ratio by 5 percentage points, from 25% to 30%. You can see the transition of the payout ratio in the chart at the bottom of the slide. Now, in the next section, I would like to move on and discuss our midterm management plan. In the past, our midterm management plan spanned 5 years, but this time, we have formulated a 3-year plan. Given the accelerated pace of technological evolution and social change, including the rise of AI technology, we felt that a 3-year plan was the best course of action. Since this is a milestone year marking the 30th anniversary of our founding, I would like to briefly reflect on our history. Our founder, Inoue Takashi, established the company as a private business in 1995. At that time, the internet was just beginning to spread into people's homes, and print media was still the main source of information. Gathering reliable information on real estate was extremely difficult. People had to visit several different real estate agents or developers, or buy magazines to get the latest information. It was even difficult to figure out how to find a reliable real estate agent. The core problem in 1995 was the necessity of making major decisions with limited information. Against this backdrop, we set a grand vision to solve these issues, including consumer frustration, dissatisfaction, and inconvenience. And we were committed to building a way to see all properties available at any given time. This was the origin of our founding in 1995. From there, Homes was launched in 1997. The solution involved two components: 24-hour access for anyone, anytime, anywhere, and our database. We expanded our catalog of properties all around Japan for both sale and rental, and it was updated in real time 24 hours a day. With magazines, properties could be sold or rented out before the magazines even hit the shelves. So, our service of connecting users and real estate professionals has directly contributed to increased satisfaction in the housing industry. For the next 30 years, we have continually innovated, striving to make the home search process more and more convenient. We leverage the new technologies emerging in each era to not only enhance the basic functions of our site, but also to successfully provide industry first solutions. In the past, this included releasing map searches and offering the first real estate specific smartphone apps in Japan. More recently, though, this includes property freshness features mentioned earlier, hazard map listings, and price map to help home seekers find detailed information on prices. We rapidly launched these offerings ahead of our competitors, and they have been well received by our users. And now, looking forward, we believe another era of major transformation is upon us: the age of AI and generative AI. Because LIFULL has been innovating and anticipating technological shifts since the dawn of the internet 30 years ago, we are uniting as a company to continue innovating through this AI era. We see this era as the beginning of a new technology that can truly embody the vision we champion. We are excited by the potential of AI to create services that match each individual's ideal home and unique search preferences. The business services of homes are now set to evolve significantly, and we are looking forward to this next stage. What we aim for is to leverage home services and AI to make people's lives more convenient and enjoyable. Now I will provide an overview of our midterm management plan. The core theme for these 3 years is to maximize group synergy, positioning us as the number one in AI-powered home searches. This 3-year plan is the starting point for that goal. We are focused on 3 main themes and topics. First is the growth of our core business, LIFULL Homes. As I have mentioned, the restructuring of our overseas businesses has enabled us to further concentrate management resources on our core domestic businesses. By investing in our domestic businesses over the last 2 years, we have achieved continuous strong growth and entered an expansion phase. Making firm investments now to secure this expansionary growth is our top priority and major strategy. The second theme is maximizing group synergy. We intend to broadly leverage the expertise gained from homes and roll it out to our subsidiaries, such as LIFULL Senior, which provides services for the aging population of Japan, and Kembia in investment real estate listings. We aim to mutually utilize our data and personnel to nurture businesses that will follow homes in size and importance. Third, and most importantly, we aim to achieve growth through AI utilization and optimization. This involves not only rebuilding existing services, but also aggressively promoting operational efficiency to continuously generate innovative new services. Here, you can see a depiction of the different domains in which our businesses operate. We will leverage our strengths to focus and concentrate on the housing sector in Japan. Our most important business, colored in orange, is LIFULL Homes, for consumers searching for primary residences. The overlapping circles designate LIFULL Senior, which operates a platform for elderly care facilities, and Cambia, a platform for investment real estate. We believe that by growing homes, these areas will expand synergistically, making LIFULL Senior and Cambia our next focal points. Furthermore, the regional revitalization business, which involves creating new value from real estate in rural Japan, will likely be a longer term area of focus. We plan to nurture this business in line with market growth while keeping control over growth investments. First is the growth of our existing business, the LIFULL Home Services segment. The segment profit for the fiscal year ended September 2025 was a record high, and we continue to see excellent performance. We will therefore reinvest significantly here, strengthening our sales and development teams, increasing our marketing investment to secure future growth. We believe the priority is to invest now to achieve record high profits over the 3-year plan. Next, I would like to share a few details about our group synergy. Over the 30 years since our founding, LIFULL Homes has accumulated significant know-how in areas such as site development, sales measures, and promotion. We have ample expertise, and by sharing this knowledge with our subsidiaries, particularly Cambia and LIFULL Senior, we aim to accelerate the growth of the entire group. Next, we are promoting the use of AI technology. We aim to overwhelmingly enhance the experience and efficiency of consumers and real estate professionals by providing cutting-edge AI technology as well as utilizing it internally. Specifically, we are working on AI-powered solutions from 3 different perspectives: the consumer-facing, client-facing, and internal utilization. Furthermore, we intend to focus our efforts on building our own proprietary solution moving forward. As I mentioned in the first part of the midterm plan presentation, transition point between print media and the internet, our early service deployment allowed us to become one of the largest portal sites in the housing industry in Japan. We are now committed to becoming number 1 in the AI era by leveraging our strength in our vast property data and maximizing synergies across the LIFULL Group. And we are currently setting up the necessary environment and structure to rapidly accumulate even more data by expanding our services and maximizing synergy. In addition to LIFULL Homes, as shown at the bottom left of the slide, we plan to accumulate data from Cambia and abandoned homes, or Akiya, in rural Japan and elderly care facilities. By doing so, we believe we can build a new database and network unique to the LIFULL Group. This data is perfectly optimized for the AI era. By having AI continuously learn from the data and network we cultivate, we aim to develop more suitable services and achieve a massive increase in operational efficiency. On the next slide, we would like to share our financial targets for this 3-year midterm management plan. For the fiscal year ending September 2028, 3 years from now, we are targeting a consolidated revenue of 35 to 40 billion yen and operating profit of 5.5 to 6 billion yen. These would be record high figures for us. Finally, we are aiming for a target line of 15% or more for the operating profit margin. Here you can see a depiction of revenue growth. The home services segment will be the primary driver of growth, as represented by the orange section. The next layer, the yellow section, represents the maximization of group synergy. We aim for this add-on growth by ensuring solid expansion in LIFULL Senior. Furthermore, we anticipate significant growth and impact from AI technology, which is currently not fully incorporated into the plan, so we view it as an additional positive factor. Through these efforts, we aim to generate a revenue of 35 to 40 billion yen 3 years from now. Our thought process behind operating profit also follows a similar pattern. We aim to expand the profit margin by consistently increasing productivity in tandem with revenue growth, and our goal is to achieve record high profit over these 3 years. Although the overseas business has been restructured and excluded from consolidation, we remain committed to building a structure capable of achieving record high profit solely with our core domestic businesses. The result for the current period was 3.8 billion yen. By making firm initial investments, we aim to generate an additional 1.5 billion yen to 1.6 billion yen from the home services segment over these 3 years. For the other businesses section, primarily LIFULL Senior and Regional Revitalization, we expect 0.2 billion yen to 0.6 billion yen, and we are positioning the acceleration from AI as a plus alpha factor. Through these efforts, we plan to achieve a target operating profit of 6 billion yen 3 years from now. To reinforce our commitment to this 3 year midterm management plan, we plan to issue stock options to executives and employees once again. Looking at the top, highlighted in orange, you can see the targets for executives of LIFULL, specifically full-time directors and managing officers. The condition for exercising the stock options is the achievement of 6 billion yen or more in consolidated operating profit for the fiscal year ending September 2028. As I mentioned before, our midterm profit target is a range from 5.5 to 6 billion yen. However, the condition for our executives is all or nothing commitment of 6 billion yen to exercise these stock options. For employees of non-consolidated LIFULL and executives and employees of our domestic consolidated subsidiaries, the conditions follow a target range. 50% of the options become exercisable upon achieving 5.5 billion yen or more, and 100% become exercisable upon achieving 6 billion yen. While there is a staggered structure, the ultimate goal remains the 6 billion yen or more, and the entire group is committed to achieving this. On the next slide, I would like to give you more information on our shareholder returns. To reiterate, we raised the payout ratio to 30% for the fiscal year ended September 2025. Furthermore, we have made an announcement confirming our compliance with the prime market listing maintenance criteria. Over the course of the new midterm plan, we plan to continuously explore ways to further strengthen our shareholder returns. Our management philosophy for the LIFULL Group is based on will-centric public interest capitalism. Based on our corporate credo, altruism, we are committed to a management policy that considers all stakeholders, and we will advance toward our vision together with all of them. We've provided a few of the initiatives that we've taken so far on the right-hand side of the slide. For the final part of my presentation, I will discuss the earnings forecast for the current fiscal year ending September 2026. We have positioned this period as a proactive year of investing and building for the future, as it is the first of the 3 years where we will invest firmly to achieve the midterm management plan and aim for record high profit. Our priority is to make solid investments and ensure we achieve returns over the 3 year period. We are focusing on 3 main areas for our investment. First is recruitment. This includes strengthening our frontline sales teams as well as our Sumai no Madoguchi consultation services. We also plan to firmly strengthen our development personnel, including those focused on AI. In the area of supporting operational efficiency, which is a clear tailwind opportunity for us, we want to accelerate the current growth rate by strengthening recruitment, developing new innovative products, and conducting corresponding sales activities. The second point is optimize advertising and promotion. As our competitors are also significantly increasing their marketing investments, we want to ensure that we are not outpaced. We will invest firmly in marketing for traffic growth, as well as branding to increase brand awareness in our target markets. Through these initiatives and these investments, it is our aim to ensure a steady inflow of users, boost inquiries, and ultimately drive revenue growth over the 3 year period. The third point, of course, is our investment in AI and generative AI. We will make firm investments in supporting the digital transformations of our real estate clients, and additional services that benefit their businesses and optimizing our services for AI. Since major releases are emerging not just every year, but almost every month and every week, we will firmly catch up, incorporate these technologies into our services, develop offerings that truly delight both our users and business partners. Furthermore, our control line is to firmly secure a profit margin of over 10% while strategically investing towards achieving the midterm plan, ensuring we achieve returns over the 3 year period. Next, I would like to elaborate on one point regarding the promotion of AI utilization. We have established a committee directly under me, the president, to examine and promote AI-related projects across the entire group. We have newly established an AI Transformation Committee. This is not just for individual business units, but rather the goal is to promote and utilize AI across all group companies. Leaders from our subsidiaries and LIFULL Group CXOs are serving as committee members, which allows us to transcend occupational and business boundaries to utilize and share know how from an interdisciplinary perspective. This slide provides the details of our forecast for operating profit. The result for the last fiscal year was 3.82 billion yen, with a large portion coming from LIFULL Homes. We anticipate an increase in gross profit from the growth of homes, but have also allocated a portion of that increase to strategic investments now, aiming for sustained future growth and securing returns over the 3-year midterm plan. The result is a forecast of 3 billion yen, which is a decrease in profit. However, I reiterate that we aim to achieve record high operating profit over the next 3-year midterm plan, and the entire group is committed to achieving this. This brings me to my final page in the presentation, presenting our earnings forecast for 2026. We aim to make a strong start with overwhelming speed to ensure the achievement of our midterm targets. We position this as a year to carve out a new future for the LIFULL Group. We forecast a revenue of 29.7 billion yen, representing a 5.6% increase, and operating profit of 3 billion yen. To reiterate, this is my first midterm management plan since becoming president 2 years ago, and I'm highly motivated to achieving it. The entire group is working together to achieve these targets, and we ask for your continued support. This concludes my presentation. Thank you for your attention. Question. I understand the fiscal year ending September 2026 is expected to see a temporary decrease in profit. Should we assume that the phase of profit growth towards the final year begins from the fiscal year ending September 2027? Answer. Fukuzawa. The conclusion is that we believe the investments made will allow us to secure returns and achieve our operating profit target of 6 billion yen in the final year of the midterm plan, the fiscal year ending September 2028. To elaborate, during the previous midterm plan period, we engaged in new business ventures to establish second and third revenue drivers, in addition to our overseas and domestic businesses. As a result, we proceeded with a strategy of selective focus, which involved discontinuing the overseas businesses and reducing losses in other segments. We are now executing the current midterm plan by concentrating our management resources on expanding our core domestic businesses. We believe that focused investment in the currently strong home services segment is a stepping stone to significantly increasing future profits. For this reason, we are willing to allow a temporary decrease in profit for the fiscal year ending September 2026. As President Ito mentioned, investment areas include recruiting sales staff who can directly contribute to the revenue, service development members or developers, and investing in AI for future growth. Based on these factors, our strategy is to increase our client network and ARPA for homes, create capacity for future investment, further accelerate revenue growth in the fiscal years ending September 2027 and 2028, and realizing profits. Question. The home services segment performed strongly last period. How do you plan to grow it in the current period and beyond? Answer. Ito. Fundamentally, the business is currently performing well, and we intend to maintain this strong continuous growth. As I discussed in my presentation, both the two wheels, our client network and ARPA, are turning strongly, meaning there is still significant room for growth in both business partners and usage fees. Given the current market conditions, we are seeing a significant increase in matching activities and inquiries in the homes for sale markets. Therefore, we plan to focus on this area, developing new products to steadily increase both our client network and ARPA. Furthermore, with the emergence of AI opportunities, we plan to relentlessly promote the AI transformation of the home services segment to enhance productivity. Since these efforts directly contribute to business profitability, we intend to advance both service growth and AI utilization. Question. Adopting a payout ratio causes the dividend amount to fluctuate with profit, which can be negative for the stock price. Furthermore, not issuing a dividend forecast this time increases in uncertainty. Why have you chosen to take these actions? Answer: Fukuzawa. Regarding dividends, please refer to page 43 of the presentation materials. Our method for shareholder returns is currently distribution based on the payout ratio. Our corporate philosophy dictates that we must first generate solid revenue and profit by having customers use our services. We then adopt a policy of distributing these earned profits back to our stakeholders. One stakeholder is our shareholders, another is the government, paid as taxes, another is our employees, and finally, future investment or retained earnings. We internally promote this as the four-way distribution. Based on this principle, when revenue and profit are strong, we significantly increase returns to shareholders, employees, and the government. Conversely, if conditions worsen, we reduce returns, adopting a mindset of sharing the burden. In line with this, we will maintain a payout ratio of 30% or higher for this period. While we could disclose a dividend forecast based on this 30% ratio, the final dividend is determined by 30% of the final profit. Under the Tokyo Stock Exchange disclosure rules, this would require us to issue a dividend forecast revision every time profit or for the period fluctuated. Even a minor revision downward would appear as a negative revision to the dividend forecast, which could lead to a negative impact on the share price. Therefore, we have chosen to disclose the payout ratio of 30% as a guideline for investors. Question: Page 17 mentions the strong performance of the homes for sales market. While the split is non-disclosed, can you give us an idea of the composition ratio and growth rate for the rental and sales markets? Looking at the earnings of brokerage companies in Japan, we're seeing significant profit growth due to the strong market for used condominium sales. Answer: Ito. As you noted, the composition ratio and growth rates are non-disclosed. However, market conditions are very strong for used condominiums, especially in the metropolitan areas around Japan, and we hear that major companies are achieving record profits. Based on the indicators from our own sites, we feel that there is a lot of activity in the resale market right now and believe there is still significant potential for future growth. We also offer a site that allows users to request appraisals from multiple real estate agencies. This service has also been extremely active recently. Given the surge in condominium and property prices, more people are likely wondering what they could get if they sold now and are making inquiries. We believe this service still has considerable room for growth. Question: There's information about Kenbiya on page 19, but can you disclose the contributions to profit from Kenbiya? Do you aim to reach similar profit levels as your competitor Rakumachi? Answer: Ito. Regarding Kenbiya's profit contribution, while this remains non-disclosed, we consider the business to still be in the investment phase. However, as mentioned, the number of listings is growing significantly. Due to market conditions, we are also seeing higher user access and receiving numerous requests from real estate operators who want to list properties on Kenbiya. We believe that by continuing to invest over the next 1 or 2 years, there is a strong possibility of substantial growth over the next 2 or 3 years. As you say, Rakumachi is a benchmark for us, and we intend to work towards that level. Question: The increase in ARPA is strong. Could you please explain the factors behind this growth and comment on its sustainability? Answer: Ito. There are two main factors behind this growth. The first factor is the strong volume of inquiries. We utilize an inquiry-based pricing model. As mentioned, successful product development leads to high user traffic and inquiries, which directly translates into revenue for us. This buoyant and active state of affairs is contributing to the rise in ARPA. The second factor is that we have seen an increase in the various inquiries beyond just traditional advertising inquiries. For instance, we receive requests for the consultation from clients who want to focus on recruiting talent or developing AI tools. We have increased opportunities to address these needs individually. By utilizing our know-how to create products and proposals, we are receiving unprecedented budget allocations, which is causing ARPA to rise, primarily driven by large clients. The combination of strong site development and customer acquisition, alongside our ability to productize responses to customer needs beyond traditional advertising, is driving the increase in ARPA. Question: Management decisions regarding fixed asset purchases, such as multi-billion yen investments in tangible and capital assets, appear somewhat lax. Could the president comment on the discipline and criteria for future investments? Answer: Ito. I believe your question stems from the breakdown of our investing cash flow. We conducted the purchase of Rakuten Stay properties this year. As detailed in our release, this is part of the regional revitalization business utilizing vacant homes. We consider the revitalization of abandoned homes through accommodations, vacation rentals, or standard rentals, leading to multi-local living or new uses, to be one of our future business initiatives. We purchased the Rakuten Stay properties specifically to acquire the know-how in this domain. However, we are absolutely not planning to continue purchasing these assets moving forward. The main objective of this purchase was to acquire the necessary know-how, and once that objective has been achieved, we plan to consider the disposition and organization of these assets. I will now ask CFO Fukuzawa if he has any further supplementary comments. Answer: Fukuzawa. In the previous period, the purchase of Rakuten Stay properties was a major investment, recorded on the balance sheet as an investment in real estate at 5.5 billion yen. This is an initiative within our subsidiary LIFULL Financial, which is planning to launch a lodging operation business. Since this is a new venture, we are advancing the project by actively absorbing Rakuten's know-how to increase the likelihood of success. We are purchasing assets and regularly communicating with them to acquire this expertise. Although the investment is shown in the real estate on the balance sheet, the primary objective is not long-term holding, but rather the temporary acquisition of know-how. Therefore, we plan to execute an orderly exit when the time is right, and we fundamentally intend to invest in our core media business moving forward. Question: how do you analyze the current share price trend? Answer: Fukuzawa. We recognize the recent decline in the share price has caused considerable concern. For the previous period, we successfully cleared the 10 billion yen listing criteria for maintaining our listing. As mentioned in the first question, although we are forecasting a decrease in profit for this year, we intend to deliver a strong operating profit of 3 billion yen. This is because we have built a structure capable of generating 3 billion yen in operating profit, up from 2 billion yen 2 periods ago. We ask for your understanding and stress that we are maintaining this capability while making investments to grow future revenue. From this perspective, the current decrease in the forecast may have been perceived as a significant negative impact. Going forward, though, through briefings like this and meetings with institutional investors, we hope to foster understanding of our recovered earning power and expected profit growth under the midterm management plan to ultimately achieve better performance in our share price moving forward. Question: I would like to know your capital allocation plan for the profits earned during the midterm management plan period and your existing retained earnings. Specifically, what is your policy for distributing the surplus funds after deducting necessary investment and working capital to achieve 6 billion yen using the four-way distribution you mentioned earlier? Answer: Fukuzawa. First, regarding the method of shareholder returns, we intend to manage the company based on the principle of the four-way distribution. As you understand, our business model is centered on our media businesses, so it does not require a significant amount of capital. On the other hand, just as in the past, we anticipate future opportunities to grow our business through M&A. The assumption of achieving the 6 billion yen operating profit target in the midterm management plan does not currently include M&A. However, M&A opportunities will arise should we find a suitable partner or investment. Engaging in M&A is an option we will consider. Therefore, we intend to maintain a certain level of retained earnings. Based on the four-way distribution principle, the dividend payout ratio could ideally be 50%. However, given that we are currently maintaining slightly higher retained earnings, we have set the payout ratio at 30%. There remains the possibility of raising the payout ratio again during the midterm plan period, particularly once we have a clear direction on M&A, or if the balance of retained earnings increases. We will make appropriate decisions based on the circumstances. Question: We understand that companies lacking cash stability determine dividends using a payout ratio based on short term profit. However, we believe your balance sheet is not under significant constraint. Instead of increasing the dividend amount, couldn't you adopt a more stable dividend policy, such as dividend on equity, DOE? Answer: Fukuzawa. Our management philosophy has historically been based on the four-way distribution principle, which is our idea of how to distribute earned profits among all of our stakeholders. Given this premise, we currently believe that a management style focused on returning profit using the payout ratio is the guideline that is most desirable. However, I recognize that the questions raised today represent valuable feedback from our investors and shareholders. We intend to discuss this internally, listening to these options and deliberating on the most appropriate methods of shareholder return. While our current stance remains based on the payout ratio, this does not mean that other options are entirely off the table, and we plan to explore these internally going forward. Thank you for your feedback.